Hello traders, welcome to the Trade Desk Global video and charting review. This is for the 1st of June 2011, looking at the commodity and oil, gold and bullion markets on this video review. We do ask that you pause the video, read the disclaimer before continuing. Newswire services for commodity trade have been fairly quiet over the course of the last week and a half, having absorbed headline news in regard to bullion margin requirements that now seem a dim and distant past, but that did have the impact of affecting the value of commodities, especially silver and gold, and to some degree oil got caught in that downdraft. But really there's very little on the economic docket from a news headline perspective that's specific to gold, silver or oil. We do have the US oil inventories on Thursday, 1 day delayed because of the Memorial weekend, that probably will impact oil valuations. From a technical perspective, we will be looking at the near-term charts when we review the oil, gold and silver markets, because of the fact that we've had a period of heavy consolidation. So we're going to be looking at 30-minute and 1 hour charts in the reviews. Had a very disjointed period of trade in West Texas intermediate oil trade over the course of the last week and a bit. We've had a couple of sideways signals that drew our attention, but nothing that looked to be sustainable. The long signal that was issued from 100.50, $100.50, really came out of nowhere and had no inclination at all that it was going to be able to easily follow through. Conversely, the signal created to go short from 101.50 really came with all of that movement contained in one 1 hour price action. And that's what we're saying on the near term charts that we've got to be very careful about, is the fact that we've got oil markets at this point in time that are very reactive to economic data. We do have the 50-day and 100-day simple moving averages, 20-day moving averages in play, but it's going to be this orange one, which is the 100-day moving average, sitting down here at the 99.25 area. That's what's going to be tested as support if oil inventories come out better than expected on Thursday. It's going to take a lot now to break above 104, especially if global equity markets do continue the sell-off. So as it looks on West Texas Intermediate, there's no glaring signals to be doing anything until the oil inventories are out on Thursday. Looking at the 1 hour view on silver, very disjointed period of trade over the course of the last 4 or 5 sessions. Got to be ever so careful if you're in this silver bullion market, because we are at an inflection point. It does look as though 35.50 is solid support on silver, but conversely 39.50 does look to be upside resistance, and we're into the 5th session in a row that is unable to give us a clear-cut signal one way or another. Very choppy, very overlapping, and if you're not already in silver with a long-term position, because you don't want to be short-term trading this chart, then now's not the time to really be looking for a new entry. We need a pullback that's going to hit that 35.50 and buy from there. If you're looking to get short the silver markets, you probably don't want to do that until you get a test of upside resistance at 39.50 that fails. So same as oil, very little to look at on the near term that will impact the valuations of silver, outside of the fact that equity markets are dropping, and with the question marks over quantitative easing programs from the Federal Reserve being extended, the path of least resistance is very likely to be long on the silver markets, but we haven't got a clear-cut signal yet, and you want to be buying the test of support, not the breakout of resistance. Looking at the 1 hour gold futures chart, very choppy, overlapping, but bullish chart, no doubt about that in the near term. Tested 15.50 an ounce on gold today as the S&P market dropped lower, and we do have equity weakness. We'll see that in the video charts that we review in the latter part of this session. But really we've got a bullion market here that is showing there is solid support for gold and silver bullion trade And really, it's a case of finding your price points to buy from. Same as silver, you need to be buying the test of support, not buying the breakout of resistance. And you've got to set your exit points. Are you going to be trading it near term? And you definitely need to be buying support then. Or are you just going to go long term and use this as a hedge against whatever the deflationary pressures may be that come from money printing? So from our perspective here, we are very, very bullish on gold, just waiting for a little less volatility in that bullion market that gives us a real clear cut signal. And at this point in time, the last pullback to support around the 1530 area just had too quick of a reaction from there to really get time to absorb it, get a signal out to clients and move. 2 1 hour periods of trade really have contained probably a week's worth of movement on the gold market. So from that perspective, we are looking at oil markets just now holding steady, silver markets holding steady, gold markets holding steady. Wouldn't want to sell any one of them at this point in time, but conversely, just need to see what happens on the week of non-farm payroll. Just some clearer signals which we will get out to clients.